Retail is dead, according to the Uneducated Economist. What is Goldman Sachs saying about the housing market? Altos research. Some insight into new home sale prices crashing and why, let's be very clear, why I hope new home sale prices crash further. In addition to that, I believe there may be still going, or maybe it just finished, there is a debate, I'm going to call it a discussion, between the one and only George Gammon and Logan Montashami from Housing Wire. That is a discussion that I think is in a long time coming. It is certainly something I will be checking out later this evening. I think the discussion between George and Logan will be cordial. I think they will get into their opinions. And I think there will be a lot for us to uncover. I expect the discussion to really anchor on a few things. I think the biggest thing that I expect in the debate was real versus nominal home prices. I think that will be an interesting twist in the discussion. I have not seen it. I'm saving it for my afternoon run. But we shall see what happens. I see All Nighter Hider apparently saw it this morning and says that George ranted. If that's true, I'm disappointed. Again, I don't know what the rant might be on. It might be on the Fed. It might be on something. I was hoping for a debate on housing and a discussion. But again, you got my attention. I know or watch George and Logan, so I will be checking it out. And maybe if it's any good, I'll talk about it tomorrow as one of my data sources. But let's get into it. There's so much going on. I want to start with the Uneducated Economist, Simon. Simon was gracious enough to be part of our Vegas event last week, someone that I have followed for quite some time. During his live stream yesterday, during the first, 10 or 12 minutes, he went into retail is dead. He went into discussion that as a person who sells lumber over the counter, he is seeing that retail investors are dead, meaning no demand. He goes into the office Monday morning expecting a busy day and the phone doesn't ring. That is one important insight, is obviously in the lumber industry, but if you step back and you look at Macy's just announced earnings this morning. Where are they? They missed top and bottom. They forecasted weaker annual sales, and they are going to close 150 stores. Lowe's beat top line, beat bottom line, but of course they lowered expectations midway through the quarter, and they expect revenue to fall. So once again, I think the Uneducated Economist is ahead of the game. He has a unique insight. He has 20 years of experience of covering that desk, and I think his economic insights are worth paying attention to. Shout out, Simon. Let's flip over to real estate. Lots of data came out in the last couple of days. Let's go to Case-Shiller. Again, as I've said many, many times, Case-Shiller is a delayed, one might almost say outdated insight into the housing market, because today is February 27th. For all intents and purposes, it is March, and we are looking at Case-Shiller December. It is what it is. But it is certainly lagging. It's not outdated. Lagging is a better word. Thank you for that wealth building journey. So it is lagging information. It is very useful for guys like me who want to look at decades of information. But if you are looking to make decisions on your buy box today, it's a little laggy. It's a little laggy. But again, what did Case-Shiller 20 City Composite say? Again, remember, we talk about last, expectations, and actuals. It gives us direction and amplitude. Last was 5.4. Yes, 5.4% up, not down, as the Crash Bros keep telling us. Expectations were for 6%. So what is that? That's an acceleration. That means it is accelerating into December. Actuals, 6.13. So again, it is always important to remember that December is when rates took a dip. Again, it'll be more interesting to see January, I think. But yes, to finish the year, right, on the reports, it will be 6.1 December to December. So certainly not a crash. How about Altos Research? Altos Research is the place I go for weekly updates. Let's just go through a whole list of them because I think we are seeing the impact of rates. I've said it before and I will say it again now. I want rates to stay at 7%. I want the underlying housing market to heal. It will only heal slowly and it will only heal with rates over 7. Here we go. For the week, active listings up 1% week on week and up 16% year on year to 498,000 active listings. This was an important week or inflection point. This is the first week that inventory built. Yes, inventory supply exceeded demand. Now last week we had active listings up, but demand was up also. So we had a net, I think it was negative 0.1. So again, this week, or I should say last week, marked the first week in 2024 we had inventory growth. I think that is a good thing. We had 59,000 new contracts. That is down 2% week on week. We had 30.4% of active listings have a price drop from original list. The median price in contract is $375K. That is down 1% week on week, but up 2% year on year. Now let's flip gears to new home sales. And I want to give you a warning and hopefully a little tidbit of the future. You are undoubtedly going to hear doomers and crash bros talk about new home prices crashing. You are going to hear things like new home prices are down 15% from peak, which frankly is technically correct. It is also irresponsible and not apples to apples. We are selling smaller homes. We are selling in different areas. We are doing lots of things different. So new home sales were 661,000 for the month. Median price down 2.6%. Last was up 7.2. Expectations was for 3% positive. And again, we came in at negative 2.6%. I want to shout out a tweet I got from Melody Wright. She shared a report that I had not seen before, so I like to credit where I see these things. She showed January 2023 and January 2024 by price points. Summary. In 2023, I want to make sure I get this right. Where is it? There it is. 44% of homes were sold below 400 grand. I'm sorry, that's 2024. 2025, I got my dates wrong. Last year, 2023, 45% of new homes sold were 400 grand or less. Fast forward a year to this January, it was 44%. So again, roughly speaking, we are selling 44.5% of homes below 400K. I think this might change. And if it does change, it will drastically collapse new home prices. What do I mean? Well, I don't know if you saw this, but where I saw it was Resi Club. They talked about this community. I think it was in San Antonio, Texas, where the new home is 661 square feet. 661 square feet. That will obviously be an affordable home. Next up, Lennar. I want to give a shout out to Nick El Tawali. I probably butchered that last name. It was not intentional. But he talked about a Lennar floor plan in Arizona, Florence, Arizona. Anybody out there in Florence, Arizona? I'd love to get validation of this. Apparently, Lennar just dropped a 969 square foot floor plan for the tune of $259K. Why is this important? One of the answers to our housing affordability problem is without question smaller footprints. It just is. It just absolutely is. If we have more and more builders build smaller homes, more smaller homes will be sold. And if they are sold in any great numbers, they will drastically influence new home prices lower. That is just how math works. Now, here's the prediction for the future. Part hope, part prediction. My hope is more and more home builders copy Lennar and they start building floor plans sub 1,000 square feet. I hope it happens en masse. I hope it happens across the country. Then, my prediction. The crash bros and doomers who couldn't define a number to save their life will be telling you that new home prices crashed 30%. Shoot, 35%. Folks, it's just how the median price is calculated. If you throw on a bunch of transactions for new homes below 300 grand and it takes off across the country, it is going to yank median home price lower. It is just how it works. So again, we can look for that. I want to let you know about a super secret millionaire conversation. One of the things we did in Las Vegas is we recorded 21 podcasts. And yesterday I was lucky enough to have a conversation with Derek, that ADU guy. Derek, that ADU guy, had a conversation where we talked about he wants to give away his millions of dollars. That video went live yesterday at 5 o'clock. What I've done is I've decided to give you the conversation that Derek and Coach Carson had at my event. It is going live at 7:45 a.m. Pacific. It is only going live on the Best of ORAT channel. If you've been watching my goals video, the Best of ORAT channel is not performing very well, and it's probably because it doesn't get any original content. So guess what? I've decided to release a couple of super secret conversations that I know are extremely valuable on that platform. So if I were you, I would subscribe to Best of ORAT, and I would check out that conversation between Derek and Coach Carson because it is amazing. To get an insight into millionaire conversations is just a beautiful insight. Both Coach Carson and Derek, that ADU guy, are amazing individuals and humans, and we are lucky. We are very lucky to have both of them in the One Rental at a Time community. So go check it out. You won't be disappointed. Other things going on. Let's talk about Goldman Sachs. Goldman Sachs has once again revised their housing price expectation going forward. They've actually changed it from 2024 to 2027. For 2024, this year, they are expecting home prices to be up 5.5%. 2025, 4.4. 2026, 4.9. And 2027, 4.9. Folks, remember, inflation is a feature, not a bug. And if you're lucky enough to be in the United States with 30-year fixed rate debt, you get the best of both worlds. You get a one-way bet on rates, and you get to control your largest cost, your mortgage. Other things going on. We've got Jamie Dimon, JP Morgan, talking about being cautious about everything. Soft landing chances are too high. He thinks the market is too positive on soft landing. He thinks the pain in commercial real estate and regional banks has just started and will be nasty. He does say that while commercial real estate and regional banks will be painful, it likely will not impact the macro. We'll see, in my opinion. At the end of the day, Jamie Dimon pegs a recession at greater than 50%. I think that is a fair bet, as I have said the same as well. Last thing I want to say is, if you watched my gold presentation, my main course, How to Get Started One Rental at a Time, priced at only $399, has had a horrible month sales. I think we sold one. So what I want to do for the rest of February, you got 2 or 3 days left. I think it's a leap year. If you buy the course, How to Get Started One Rental at a Time, I will give you the 2-day event recording, all the podcasts. If you have that, I'll give you the 10-week boot camp. I want to reward you if you've been thinking about it, to give you a little cherry on top. So How to Get Started One Rental at a Time for the rest of February. You can get that and up to $200 in free goodies or classes. I hope you enjoy that. I hope you take advantage of that. And finally, let's congratulate Greg. Greg, I should have done this yesterday, buddy. My bad. It will go out in the mail today. Greg, congrats on your next deal. Your card will be out there. Fun fact, I've given away so many of these, I had to order another batch of 1,000. So that means we've given out 1,000 of these over the last couple of years. So I think I got like 10 left. So we had to order another batch of 1,000. So Greg, congratulations. Card goes in the mail. Folks, have an amazing day. Shout out Simon. Shout out Logan. George Gammon. Look forward to that conversation. Shout out Derek and Coach Carson. Really, folks, you're going to want to watch that conversation. Best of ORAT. Check it out. It goes live at 7:45. In fact, it probably is live already. Take care. Later.